Well, the market's moving a little slowly today, but there's still plenty of opportunities, at least the way I see it. Today, what I'm looking at is the S&P 500, specifically the SPY options. There's an interesting setup there right now. The S&P 500 has been making a fairly steady increase in price for a little bit now. However, it's kind of reached its resistance level, and it doesn't look like it's going to break through. Now, on the other side of that, on the volatility side of the equation, the implied volatility is high. The VIX is up above 17, and that means I think it's a good time to be selling options. So the trade that I'm looking at is selling the credit spread in SPY. Now, I had to choose a month, and so here's how I formulated my plan as far as which month to choose if I were to trade this. The traditional September options, they don't have enough time until expiration to make the strikes that I want to sell meaty enough to have a big enough value to make it worth selling. They're too cheap. The October options, they've got too much time, and so the theta is just too small. It's not really a good enough trade. So what I like is the quarterly options that expire on the final trading day of September. They're kind of the best of both worlds. High enough price and big enough theta. So I'm looking at selling the 145, 147 call credit spread in the September quarterly options. What I would do is I would sell the 145 calls and buy the 147 calls, and I would take in a credit of somewhere around 30 cents. This is Dan's plan, and this is Dan Passarelli with MarketTaker.com.